Stocks start the week on a positive note, but caution still lingers on the street. Financials and auto stocks, they charge up, but realty and cement pull back.
An outperformance by the O2C business powers an earnings beat for Reliance Industries. Analysts see healthy refining margins and the exploration business driving growth in 2023.
Ultratech skids despite good volume growth as realizations fail to perk up, while JSW Steel slips despite strong earnings on steep valuations.
And the Bank Nifty charges up after Biggie's ICICI Bank and Kotak Mahindra Bank report record high income and margins. Mid-cap banks like IDFC First and RBL also post strong numbers, while Bandhan Bank claims the worst on stresses behind.
Good afternoon. You're watching us here on Halftime Report. I'm Manglam Malu, with me Sonia Shenoy and Sonal Bhutra in the studios. Looking good for a Monday afternoon. A 100-point gain on the Nifty, 300 points on the Nifty Bank. The mid-cap index too, gaining about half-odd%. But importantly, we have some numbers at the bottom of your screen. Canara Bank has reported numbers. On the bottom line, it is a beat as per our expectations. Even the NII at 8,600 crores is above street expectations as well. We have seen some improvement in the asset quality, so we'll get in some more details. We'll perhaps get in Abhishek to comment on this as well. A 92% jump in the profitability year on year, but as compared to street expectations as well, it is a beat. The stock doing well. Hi.
Oh, hi. Good morning. Good afternoon. It's noon. Yeah, it's noon now. So good afternoon. And it's a truncated week. We can afford to kind of,
laugh it out.
Laugh it out.
Yes.
Absolutely. And I mean, the bulls have reclaimed a lot of lost ground, right? So if you look at it now from the lows in December, the Nifty is up almost about 2%, led by, of course, a lot of heavyweights. The December low was about 17,774. So there we are, up about 2%. Just a couple of things that I wanted to mention before we kickstart the show. Now, you have a lot of numbers. Of course, Reliance Industries, despite numbers being above street estimates and better than expected, the stock is absolutely flat. There are some concerns about rising debt, elevated capex, etc. So, and a lot of brokerages have scaled down their EPS estimates. We'll talk about that in greater detail. But for now, the stock is reacting to that. A couple of them, in terms of the auto stocks, are also making big headway this afternoon. So whether it is M&M, whether it's Tata Motors, these are stocks that have already gained about 5 to 7% this month, and lot of auto earnings coming through. So tomorrow you have Maruti and TVS Motor. On Wednesday you have Bajaj Auto, Tata Motors and SEAT coming out with numbers, and some of the smaller numbers like Amara Raja Batteries, etc. So lots in terms of auto numbers, and of course the ones that have just come out, the likes of Canara Bank doing very well.
Oh yes, it is, and we'll of course get in more analysis on this one. But a couple of other stocks which are in focus today. Aether Industries that reported numbers on Friday during market hours. It continues its up move, so that stock is up around 5% as we speak. We have other names which are buzzing in trade: IGL, Gujarat Gas, GAIL. Globally, we are seeing that spot LNG prices, they have come down, and that is something which is positive for these companies, and that's the reason those stocks are at the day's high right now. GSPL too higher in trade today. The other one that I'm watching out for is Petronet LNG. Again, the numbers were very weak, weaker than what the street was working with, but the stock has recovered from the day's low, and on the fact that yes, since spot LNG prices are lower, imports will be higher, and that's why that recovery on the stock. Puravankara too in focus, and that is on the back of Q3 operational update, which has been good for the company as well. And we do have Abhishek with us to tell us how the Canara Bank's numbers look this time around. Abhishek, over to you.
It's a strong set of numbers coming in from Canara Bank, especially on the NII growth. The NII growth on a sequential basis is about 15.7%. This compares to reported advances growth of just 3.5%. So it goes on to show how the yield has been commanded by the bank, and that has led to sharp net interest margin improvement as well. Remember that in the previous quarter, the net interest margin was 2.83%. So it would be around a 10 to 15 basis point improvement based on my calculation. The OPEX continues to remain elevated, and that is why you are seeing operating profit growth almost flat on a sequential basis, but provisions are on the lower side, and that has helped PAT beating estimate. Asset quality, that's improved massively in absolute value. Gross NPA is down 4.5% quarter on quarter. Net NPA is down about 7.5% sequentially. Both the ratios, gross NPA ratio as well as net NPA ratio, they have come down on a sequential basis. Loan growth pretty strong. YOY, it's almost an 18% growth, which means that they have gained market share on a YY basis. But sequential loan growth is around 3.5%. System loan growth was above 5% on a quarter-on-quarter basis. So quarter-on-quarter, they have lost market share, but no taking away from the fact that it's a strong show from Canara Bank on the PNL front, led by the yield factor. Back to you.
All right, Abhishek, thanks a lot for that. Strong show coming in on Canara Bank. The stock at the high point of trade, though it has corrected about just 5% from its 52-week high. It has seen a big rally of almost 50% in the last 12 months or so as well. So that's about Canara Bank. But we have earnings flowing in thick and fast. We have the management of Keval Kiran Clothing joining in. Hemant Jain, who's the joint MD, joins us to detail their earnings. Keval Kiran, of course, you would know as the company that makes the brand Killer Jeans and all the other brands as well, like Lawman, Easy's, there's Desi Bell as well. And increasingly, you would see the Killer brand more because they recently tied up with BCCI for the Killer logo to be on all the jerseys until May 2023 as well. 16% revenue growth, 27% profit growth. Mr. Jain, before we talk about the numbers itself, just wanted to understand your deal with the BCCI this time around. It is up until May 2023. What's the money that you've spent for it? Is there a provision for you to increase it? And can you tell us, have you seen any increase in sales engagement or any numbers, benefits of engaging with the BCCI?
It's too early to say for the sales because we did this deal for enhancing the brand recall and aspirations of the brand, to hide the aspirations of the brand. So it is too early कि उसका sale पे कोई impact आएगा because your deal is for 5 months only. So but yes, brand recall value बढ़ जाएगा और aspiration बढ़ेगा तो इससे sale पे impact तो 100% होना ही होगा.
मनी पैसा कितना दिया आपने इसके लिए जैन जी?
I cannot say कि कितना मैंने ये दिया है because as a policy we cannot disclose this amount.
Okay, so what are your ad expenses currently, Mr. Jain? And post this, how much can they go higher to as a percentage of sales?
As per the business revenue, we did 6 to 7% end of the year. Maybe it is 1 or 2%. It will be increased, maybe, but it is on the budgeted only.
Mr. Jain, good afternoon and thanks for joining in. I noticed that the contribution of jeans in your overall business has reduced quite a bit. It's now, I think, just about 56% and you're looking to get into athleisure as well. So just tell us 1 to 2 years down the line, what is the kind of growth trigger for the company? Where do you see the large part of growth coming in from? And what are the numbers expected to look like?
So for next couple of years, we are targeting 18 to 20% year-on-year growth. Okay. And we will add the genders because we are not in the kids, we are not in the ladies wear brand. So overall, we have to increase the brand, categories and as well as brand genders.
Okay. So this 18 to 20% year-on-year growth, how much of it will come from new segments? You're looking to launch athleisure as well in the summer of this year. What is the investment that you're looking at over there?
As far as investment is concerned, we are not looking more than 25 to 30 crores. And as far as sale is concerned, we need at least 3 to 4 seasons to set the product or any category or any genders. So, but yeah, we are targeting 18 to 20% year on year. So we will increase our regular business also and with some adding some categories.
And when you're talking about adding categories and also the ad spends that we spoke about, will the margin profile of the business also change? In Q2, it was 16.9%. With 18 to 20% growth, what kind of margin band are you looking at?
We are looking at, we will 18 to 20% EBITDA margin, we will manage.
So 18 to 20% growth and EBITDA margins at 18 to 20% as well, Mr. Jain. All right. I have seen accessories as a contribution increase to your overall proportion of sales as well. Can you give us a sense of whether that is, margin accretive and what kind of sales are you anticipating from accessories going forward?
See, as far as today now the brand is all about the lifestyle. Now it's the brand is not about the product. Earlier, if you see the brand is like Killer means jeans. Now nowadays it is a lifestyle brand. So when we increase the accessories means we are doing deodorant or some other categories like track pants or something. So when we adding the category and today the brand is all about the lifestyle, so we will get the increment in the business.
Okay. So for all of these, expansion plans, you said about 30 crores is the investment you'll make in athleisure. You're looking at overall 18 to 20% growth.
Not only
Will you be, sir, will you be taking on any debt at any point in time, and will this raise your debt levels?
No, already company have a reserve, so we will utilize our reserve. We will utilize the funds from the reserve. It's not necessary to borrow the funds.
Okay. So what is the cash in your books currently? Will you be utilizing that? And your working capital days, you had been planning to cut them down to around 110 to 120. That is by FY22. What is the current number here? Will they see further reduction?
We are working on 130 days, and we want to cut down up to 120 days.
120 by when?
To better the rotations. We will do the better rotations from the business.
Okay, and as far as your channel is concerned, how do you plan to increase your sales? I mean, you have exclusive brand outlets, multi-brand outlets, you have tie-ups with modern trade like Reliance, etc. as well. How much is e-commerce as a percentage of your sales? Can you give us some sense on your channels?
See, we are going to open the most of the retail EBOs. See, today we are working around 435 stores. In next 2 years, we want to do the doubles. And as far as the retail is as far as the retail business is concerned, we will do 50% from the retail and 50% from the trades.
Okay. So on an average, your annual revenues have been in this range of around 450 to 600 crores. Of course, 600 crores was in FY22 in the post-COVID phase. But how much do you think, this range has been there, 450, 500, 550 crores. How much do you think you can take it up to, say, over the next, what could the compounded growth be? I mean, you spoke about 18 to 20% in this year, but what could the average be, say, a couple of years down the line?
Next couple of we are targeting 1,000 crores.
By when?
2025. Till 2025, 24-25, we were targeting 1,000 crores.
Okay, so that by FY25, you're saying the revenues will touch 1,000 crores. Right.
So this is also we are doing more than 20% growth. So when your sales last year is 21-22 is 605 crores. So this year we will close about 20 to 25% growth in this year.
Okay. Mr. Jain, thank you so much for joining us and giving us all those details. It was a pleasure speaking with you. That's the word coming in from Kiran Clothing, expecting 18 to 20% revenue growth. Margins also between 18 to 20%. The stock, though, at the day's low, despite a decent set of numbers in quarter 3. Time for a break now. Ruchit Jain of 5paisa.com will join in with some trading strategies on the other side. Stay tuned.
Welcome back. It's been a good day of trade so far. 100 points on, rather, Nifty holding above that 18,100 mark, though off highs mildly that we're seeing from today's high itself. And that coincides with the levels that we're seeing as resistances over the last few trading sessions as well. Upwards of 18,150. The stocks that are taking the Nifty lower are Titan at the low point of trade. We have Adani Ports, Shree Cement not doing too well as well. And Reliance is actually at the low point of trade. So by virtue of its weight, Reliance is also taking the Nifty off highs. But the Nifty Bank has been doing well. So if you just take a look at the Nifty as well as the Nifty Bank, you see the Nifty Bank outperforming with a gain of almost 0.75%. And both the indices today, in today's gap up, crossed the 20-day moving averages. So if you just take a look at the Nifty 20-day moving average, it's placed at 18,043 and the Nifty Bank 42,596. Not only is the Nifty facing some resistance at highs, the Nifty Bank too is facing some resistance at the 50-day moving average of 42,835. However, the fact that we are holding above that 18,100 mark gives bulls a lot of support, and as a result of which we are seeing the 18,100 put see a fair amount of writing for a premium of 53 odd rupees, telling you that 18,050, which is the 20-day moving average, would be an important support. We're also seeing some writing in the 18,000 put. Remember, this is the expiry week and all monthly positions will have to be squared off on Wednesday itself because Thursday is a holiday. The 18,100 call writers are still pretty active. We saw some short covering there, but that quantum has come down. So let's see whether we continue to see some resistance upwards of 18,150 and support at 18,050 itself or not. To tell us more about the technicals, we are joined by Ruchit Jain. Ruchit, your thoughts on the way the indices are moving and individual stocks?
Yeah, hi, very good afternoon. Well, we believe that the downside for the market seems to be very limited from here on. primarily, if you look at this entire series, most of the data has been positive for the market. If you look at the US markets, Nasdaq has not breached its last year October's lows. Now Dow Jones is trading above its 100 EMA support, and even other dollar index is trading at lower levels. Rupee has appreciated, so all the factors were positive. But it was only FIS selling that was dragging down the markets, and we had seen that recent 1,000-point correction due to that. But now, if I look at the index futures data from FIS, during mid-series where we had about 38-36% long-short ratio, that is now improved to about 52%. So which indicates that the short positions have also been covered, and that only negative data too has turned at least neutral for now. So the downside, looking at the data, we don't think that market would see any significant down move from here. Technically, 18,070, 18,050 would be the support range where, again, we should look for some buying opportunities. So buy and dip strategy should be placed over here. Buy near 18,050 to 18,070 range, keep a stop loss below 17,950, and we can again expect higher levels around 18,200, 250, which has been the resistance of late.
Okay, Ruchit, what would your individual technical picks be in this case?
Yeah, so two stocks, both from the PSU names, primarily because Nifty PSU index is trading at its all-time high. So this is one of the index which has seen an outperformance, and this outperformance could continue. First one would be HPCL, where after a price-wise correction, we have seen a resumption of an uptrend over here. So overall data also remains positive for HPCL, where on correction we have not witnessed any short formations, but those previous longs are still intact in the stock. So one can go long on HPCL at current levels with stop below 242 for potential targets around 260 to 262. And second pick would be GAIL, where again a good breakout technically has been seen today with a gap up opening. So I think this is headed higher towards 108 kind of levels. So GAIL can be bought at current levels, and one can add on dips if we get it near that 101, 100 range. Keep a stop loss below today's low of 99 for potential target of 108.
Okay, well, this market is definitely in a mood to reward handsome earnings. Just take a look at the stocks. Persistent Systems is now at the highest point of trade. It came out with a very strong set of numbers. Now up almost 3%. And I was looking through Canara Bank's internals as well, looking very strong now. Abhishek tells us that the net interest margins are at a 29-quarter high for Canara Bank. That's moved to the high point of trade now. Net interest margins at 3.04%, and the slippages too are lower to about 3,200 crores versus 3948. Just two quick chart checks on Canara Bank and Persistent as well, Ruchit.
I think if the banking does well, then PSU banks too would resume its momentum. Although of late they have seen some consolidation, but Canara Bank is good till it is about 310. So 310 has been a very strong support in this recent consolidation. So till that is intact, I think one can expect high levels around 335, 338 in the short term. And Persistent, of course, after that results, we have seen that it was not only a one-day buying interest, but that follow-up move has also been very strong, because last couple of days also the volumes have been good along with the price up move. So this outperformance could continue, and the stock could head high towards 4,600.
Okay. All right, Richard, thank you so much for joining us and taking us through your technical picks. With that, we'll slip into a short break. Up next, we have a special segment, Value Add. We'll be focusing on HUL. Stock is gaining in trade today. Stay tuned.
Welcome back to Halftime Report. Well, in our special segment, Value Add, Mangalam today is looking at HUL. Mangalam, what's up with HUL?
The stock itself is up right now. The thing is that it had fallen about 4% on Friday's trading session. And the reason why that happened was because the street was worried about the company, or the negatively surprised by the company increasing their royalty from 2.65% to 3.45%. But from those lows, the stock has recovered. And the question we're asking on HUL is that, is the street actually looking beyond the royalty impact? Because the internals of the numbers were good. The third quarter performance was nice. The commentary, the company said that raw material and demand environment is gradually improving. Volume-led growth will return going forward. So these factors should improve their fundamentals. And secondly, while HUL's royalty has increased by 80 basis points, if you just compare it with the peers, you have Nestle and Colgate. They are at 4.5% of sales, and this is as per their last year's and royalty as a percentage of sales. So if you compare HUL's royalty of 3.45% versus peers, it is higher than P&G, but of course it is much lower than other larger players like Nestle and Colgate itself. So is the street willing to give them that benefit after the initial decline that we saw, because we do have near-term triggers for HUL as well. The first one, of course, is the near-term demand improvement and margin improvement. Second one, they've made a lot of acquisitions, Oziva being the latest one as well. So scaling those acquisitions up, seeing Horlicks grow further is something that we'll be watching out for. There is an imminent leadership announcement as well, which is likely because Sanjeev Mehta, of course, terms end in October itself. So before that, if there is a new leadership announcement that comes by, we'll have to watch out for that. And now everyone's talking about the valuation decline that we're seeing in the D2C universe. So is there any more M&A opportunity coming in from the D2C universe itself is the big question. So can the street now look beyond the initial decline of the royalty and look ahead at the positive triggers is something that we'll throw some value on, maybe perhaps.
Okay, all right. So that's about HUL. By the way, there's some fall for the markets from the top. So the Nifty is up around 77 points. When we started the show, it was up around 110. So watching out for the moves on the markets right now. But for now, we'll slip into a short break. More on markets on the other side of this very short break. Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, we are focusing on stock-specific news, and Yes Bank shares, they are trading sharply lower after the Bombay High Court on Friday quashed a decision by Yes Bank in March 2020 to write down its additional Tier 1 bonds to zero. Now, of course, Yes Bank will appeal to it, but we do have Lata with us to tell us what exactly it means for the stock and the bank as well. Lata?
Okay, first, what are the developments after the High Court held that no, the administrator was wrong in writing down the bonds to zero? That was quashed. So the developments after that is Yes Bank, which we reported on Friday itself, said it is going to appeal, and we had the MD confirming it today on air. We understand from legal sources that the Reserve Bank may implead and join, but not yet confirmed from the Reserve Bank itself. Now to what was actually said in the verdict. The High Court says that, what was the sequence of events? On March 5th, 2020, the Reserve Bank put out a draft reconstitution of Yes Bank because it had reported very heavy losses. In that document, the Reserve Bank had clearly stated that the 81 bonds worth 8,500 crores or so would be written down to zero. The final reconstitution report came from the central government on March 13th, and there that clause was omitted. So that was one of the reasons that the court said that the administrator who cancelled the bonds on March 14, the next day, should be bound by the scheme of reconstruction, in which the central government omitted that line. Now, there are other arguments from the Yes Bank team in the court that you don't need the central government's backing for it. The 81 document itself says that if the bank is in trouble, either we can stop paying interest, or if it is in even bigger trouble, it can be written down to zero. So that is their point of view. Now, all that will have to be presented in the Supreme Court. The Supreme Court can take any position. It can back the High Court's judgment, or it can say, okay, you can write it down, but you have to give something like equity value. You can't write it down below equity. Or they may go the whole hog like the RBI and completely stand by the Reserve Bank and the Yes Bank's decision. What we hear from Yes Bank when they came on the channel is that other things are not affected. There are Advent and Carlyle and others who have invested in Yes Bank just last year, and 75% of the money they gave upfront. The remaining is through warrant conversion, which can happen in 18 months starting March 31. The managing director told us that there is no danger, they will do the conversion. So all these are positives for Yes Bank investors, but ultimately the court order is an overhang. I guess Yes Bank and RBI will ask for a stay first when they go to the Supreme Court.
All right, Lata, thank you so much for that. With that, we'll slip into a short break. As we do that, here's a quick programming update for our viewers. CNBC-TV18 has compiled a list of the top 20 stocks to watch for in 2023. It's been a carefully curated list of companies that warrant a closer look in 2023 based on factors like growth prospects, new launches, management changes, reforms, etc. As a disclaimer, of course, this is definitely not a recommendation list, but a list of companies which have meaningful triggers lined up this year. Tune in to CNBC-TV18 tomorrow at 10 a.m. We'll get you a sneak peek into the names and reveal the list.
Welcome back. Well, we just want to end the show on a note that, a couple of stocks do deserve mention. So before closing the show, let's just tell you a little bit about them. We have Ultratech Cement, which is down almost about 3.5%. There is, of course, realizations that have missed street estimates, and that's something that the street doesn't like. However, the management commentary has been on the bullish side, so that has not really worked for the stock at the moment. But the fact that revenues, have barely grown, as well as the realizations have grown just about 0.2%, is something that the street has not liked. JSW Steel, Adani Ports, NTPC, Grasim down almost about 1%, and L&T as well is under a bit of pressure. But on the flip side, you have a lot of stocks. Divi's is coming back a tad bit. Power Grid, Eicher Motors are a couple of other stocks that are trending in the green. But with that, we'll take a quick break. We're done with equities for now. When we come back, it'll be time to talk commodities. Manisha Gupta will have Surendra Mehta of India Bullion and Jewelers Association. Do stay tuned in.
Welcome back, and keeping it with gold, because yet another day and another record high is what we are dealing with in the Indian markets here. So even as the Indian rupee is trading at a 2-month highs here, we've seen gold make an all-time high at 56,500. Other 700 rupees on the higher side. That's on MCX. Of course, on the spot markets, it's much higher with the addition of making charges, GST and all of those taxes. Surendra Mehta of IBJA, he's the director there, now joins us on the show to talk further about that. Mr. Mehta, hi. First of all, about the prices itself, and we are trading at an all-time highs on the screens right now. How is it in the Indian markets? It's the wedding season which is on. There would be festivals coming up as well. At these higher prices, at these volatile prices, how is the buying?
Well, definitely, as rightly pointed out in many other shows also, once the gold prices goes higher beyond 51,000, automatically the consumer consumer actually stop buying gold. As far as marriage season is concerned, or the festival season is concerned, these are the forced buying, and this buying would continue irrespective of whether the prices are higher or lower. But definitely, when the prices goes up, the quantity for the wedding season and festival season gets reduced. So as of now, I can say that the market is down by almost 50 to 60% in respect of consumers.
All right, so not very great buying coming in. But the other big story of the day clearly has been the BIS raids on various jewelers and assaying centers that we've seen happen over during the fortnight there, or overnight, over the weekend, that is. There have been some reports, and we've been talking about that, on fake hallmarking seems to be becoming a menace here. But BIS clearly has taken tips, done its procedure, done its homework as well, is what BIS told us in a conversation with them. How do you read into this? And this seems to be happening majorly in Zaveri Bazaar.
We must understand that making fake jewelry or distributing fake jewelry is as good as making or distributing fake notes, because eventually the people's money is involved, the consumer money is involved, and it is the hard-earned money. And as an jewelry association, we do not support any of these hallmarking centers or any of the jewelers who are involved in such activities. There must be about 150,000 jewelers registered with the Bureau of Indian Standards, and I think if 100 or 200 jewelers are giving a bad name to the industry, or out of say 1,000 hallmarking centers, this 10 or 20 hallmarking centers are giving bad name to the industry, they must be dealt with legally. They must be punished, and whatever penalty or prosecution which are applicable under the law must be placed against them. We support the interest of the consumer, and we do not support such activities at all.
Mr. Mehta, we've spoken earlier on hallmarking, on how it's a positive and how it provides a level playing field to across jewelers. With instances like this, would you say that market tends to go to premium jewelry stores? They're ready to pay a premium, but ensure that you get hallmark products?
Well, definitely. This happens, and because eventually the consumer will always try to go to a big corporate showroom, thinking that the fake hallmarking will prevail in the smaller store, in the small stores. But just by virtue of this communication, I would like to reiterate to the consumer once again that BIS hallmarking jewelry is a sign of purity. And if you come across any such fake jewelry or fake hallmarking, please report this matter to the BIS authority or to our association. We will take suitable action against them. And the level playing field still continues. The 150 jewelers cannot take away the business of 150,000 jewelers.
Mr. Mehta, another thing that the industry has seen a turning in last couple of years, pre-COVID to now, we've seen a lot of online financial products, digital gold, e-gold as well come into the market. I get your point when you say it's just perhaps less than 0.5% of the population or jewelers who actually get into this. But would you say when it comes to financialization, investment, and when it's not about buying jewelry, these other instruments perhaps perform better?
No, in reality, very soon you will be hearing that even the coins and bullions will be hallmarked. We have already requested the Bureau of Indian Standard to start hallmarking for this coins and bullion also.
Okay.
And I think if you buy a bullion or a coin from the BIS registered refiners, then these refiners always produce India Good Delivery mark goods,
okay,
and you can be assured of the purity.
All right. Some things to watch out for, and a lot of clarity, of course, from the BIS also awaited there. But thank you, Mr. Mehta, for joining us. The gold demand clearly on a dip here and some concerns coming into the industry. But as he said, those are something that is being managed right now. With that, it's wrap on Halftime Report. After the break, Business Lunch will take all the action ahead.